Welcome, everybody, to another installment of the Everyday Pro Investor YouTube series here. You got Brian and Evan again. So coming off the long weekend here, and we're about to have a short week, 4 days of trading. But what a crazy week we had last week. Evan, you want to talk a little bit about the sell-off that we saw on Thursday and Friday there?
Yeah, so we had to start on Thursday, to your point, and then Friday it continued before having a little reversal. During the sell-off, we did pick up a SPY put spread just to offset the pullback a little bit. Definitely saw it coming, though. I mean, I think in our last video we talked about how we were getting out of some of our leveraged positions because we were anticipating some type of pullback. Things were just getting, they were just, especially in the tech space, we have names that were getting pretty large market caps for what really they should be trading at, and definitely anticipated the pullback that we got. I don't know if we'll continue to see prices move lower or not. What are your thoughts there?
I think you're going to see some names continue to move lower. I don't think you're going to see the mass sell-offs that you were seeing on Thursday and Friday. I mean, what was it, Thursday we were down like 5% on the NASDAQ. I think Friday at one point we touched 5% again before closing only down about 1%. So there's pretty strong recovery there on Friday. But I could see some names. You've got certain tech names that have really run up and they're trading at 50 times sales. And then you got other names like Apple, which you saw Apple pull back. Probably rightfully so. It had really run up a lot. But Apple's not a name trading at 50 times sales. They're trading at like 30 times earnings. And we actually stepped in. We started to build a position in Apple once it got down there under 115. And I think once you saw Apple hit 110, a lot of buyers came in. That seems to be a really strong support level there, right around 110. So I think you're going to see names like Apple, Microsoft, Salesforce really start to recover. And then you're going to have some other names, maybe like a Fastly you could even look at, and maybe even a Zoom as well, even though Zoom is a household name now. I think that it's just trading at a ridiculous multiple, and I think you could see it struggle here for a little bit. And I think you're going to see some of these other bigger tech names kind of start to hold steady. I'm not saying they're going to rebound really, really fast. If there was one name I think that could, it would probably be Microsoft. But I think you're going to see other parts of the market start to show some strength as well. Financials performed pretty well last week. So I think you're going to see that possibly the Dow Jones and the S&P kind of outperform the NASDAQ here just for a few weeks as things kind of, even out a little bit because the tech area was so overbought and so many names became overvalued. Anything you want to add to that, Evan?
We still had the best August closeout in roughly 3 decades. So if there's any positives to take away from last week, we have that at least.
Yeah, and you look at Monday was August 31st, closed. Tuesday was a good day. Wednesday was a good day. Actually, a really good day. I think Wednesday the market was up like 1.5%. And we went ahead on Wednesday. We were watching. We talked about Wingstop, that put spread. Actually, a couple different put spreads we talked about, and we actually closed those out at a profit because it looked like Wingstop was just going to hang in there. It wasn't actually going to roll over like we expected it to. Well, of course, Thursday ended up selling off, right, with everything else. And I actually went all the way through both our put spreads. And you could have made a lot more money than we did. Unfortunately, we got out a little early. But like you mentioned, we put on that SPY put spread to kind of offset the overall market moving lower. And, like you mentioned, August, good month, best month in 3 decades for the market. September is historically a pretty bad month for stocks. Do you think that's kind of going to hold true, Evan, or what are you thinking for this month?
I see we could possibly get a slight bounce back in the tech names, some of them that sold off pretty hard. I think a company like Microsoft that didn't sell off as hard as the other tech as well would do relatively well. So I guess I would see a little bounce back in all of tech. And actually, you saw at the end of last week, you had companies like the cruise lines, I think, did pretty well. So I don't know. It could be a relatively good month, in my opinion. I don't know. What are your thoughts there?
I think it just like you mentioned, you talked about cruise lines and stuff. It's going to depend on what sectors you're in. I think if you're in the right areas, you're going to be all right. I don't think, like I said, I don't think tech's going to be like a way continue to pull back, but I do think it could underperform. Like I said, financials, industrials, maybe even some of the travel stocks start to perform a little bit better. People putting on that value trade a little bit. We've seen a few value rotations over the last few months, but they only last a couple of days, and then everybody goes back into tech. I think you might get a little bit more stickiness here. Not that you're not going to see tech recover. They're just not going to bounce back as quickly as they did before. And I think that you're going to see the value trade, the cyclical trade kind of be put on and probably stay on a little bit. I think people want to start to creep into these names because whether it's a vaccine or herd immunity or just overall people getting tired of the whole COVID situation, we are improving in the economic numbers, and I think 2021 is going to be a pretty good economic year for the U.S., and you don't want to get into these cyclical names too late because at that point they're already going to run up. So I think you're seeing people start to move into some of these cyclical names, and I think they're going to stick in there a little bit this time.
And then update on PayPal. We had the 200 and 205 calls last week. We sold them when PayPal hit 210, which I believe was on Thursday. And then actually, or it might have been earlier in the week, I think I held some of my calls until Thursday, though. And
I think it was Wednesday. I think is when it hit 210, maybe even a little bit over 210. I think we sold when it was at 210, and the stock might have actually got to like 212, 213.
I think that's what it was.
But
yeah. Go ahead.
Yeah, I was just gonna say, but I know, like you mentioned, you actually kept a few for your account. And did you end up, I can't remember, did those ended up pulling back and you had to sell them at less of a profit, or what happened with those few that you held?
So I held them, I was down a little bit, and then it actually made a run, and I went ahead and sold for a really nice profit, and actually the technicals were perfect for indicating a pretty large pullback, and I put in an order at 359 to buy a put. It would have been a 200 put expiring, I think, a week out, so super out of the money. It was real cheap, and the clock turned 4 o'clock as soon as I put my order in, so I didn't get it. Next day, which was Friday, it opened at 2:03, and I just hurried up right at open, and I went ahead and just grabbed the 200 put. Same thing, expired in a week, and I think PayPal on Friday when it hit 198, I went ahead and sold it for a really nice profit. Wish I would have held on to it because it closed at like 191. It was trading in the 180s at one point, so the technicals were there for a huge pullback. Just wish I would have been able to get in, at that 359 mark the previous day.
Yeah, I remember you telling me about that right before it closed. You tried to get in, and unfortunately didn't get that execute button hit just in time, which it always seems like anytime you don't get that trade in right before closing bell, that the next day it turns out it would have been a huge winner.
Of course.
And then, what was it, Tuesday or Wednesday this week, we put out a tweet. It was a Shopify trade. Not something we actually put out to our members. It was kind of a high-risk, high-reward play, not something that really fits the everyday pro investor portfolio, but it was something we put out on Twitter. It was the Shopify 1150 calls. So when we actually put it out there, they were trading for about $4 within one day. So I think it was early the next day. Those were actually trading at $27. So basically you invest $400, it turns into $2,700. Now, we didn't actually get the full max value on that, which is always hard to top tick something like that. But once it got up and was real nice and profitable for us, we did take our profits there. But the potential was there to make it into a 400, 500% return. We didn't quite get that, but that's all right. You don't always top tick everything. But if you follow us on Twitter, you would have seen that. You would have been able to get into that one, and just really nice return there.
And then for this week, for Shopify, I think it might bounce off the 50-day, head back towards 1050. So I don't know if there's any trades that you're looking for there for this week or not.
Yeah, I would say that if you're going to play this name, a short week, mind you, four trading days, you could probably just go by the 1050 calls expiring this week, knowing good and well that you might have to sell those quickly at a loss. Or if it starts to run to the upside, you're going to make a lot of money quickly. This is a name that's highly volatile, a lot of implied volatility, and you're going to have a short time crunch there. So if this thing starts moving in the right direction, you got to get out. And if it starts moving in the wrong direction, you got to get out. I would say probably watch how it opens on Tuesday. See if you get a little bit of a sell-off, and then if there's any indication that you're going to get a reversal, that's probably how I'd look to play this name. I do think, like you mentioned, it can move back towards that 1050 level. It's right at the 50-day right now, and I think it could bounce off it and move back. I mean, basically right in trend line too. I think it's just below its trend line as well. So you could see a quick recovery there if this name gets its momentum back. And then I think another name in the tech space that I thought was setting up really interesting for this week is Netflix. When you look at Friday, it bounced really hard off the 50-day moving average. It sold way down. It was a big, huge candlestick. Touched that 50-day and then just rocketed right back up. So I think there's a lot of potential there for Netflix to kind of head back towards 550 where it was on Wednesday. I think Wednesday it hit 550. So I would look to play that through calls too, short-dated calls. Look for Netflix to start moving in the right direction and probably somewhere in the 540, 550 call range. Buy something in there. Look for it to start to move early Tuesday into Wednesday and get out of that name. If you see it going the wrong direction again, now Netflix options aren't as expensive as Shop, but it starts going in the wrong direction. Those are going to lose value pretty quickly just given the short time frame.
Yeah, then we had Microsoft, which I mentioned a little bit earlier, but it's just below its trend line. Should be due to recover sooner than other tech names, like I mentioned earlier, just because it wasn't as overbought or overvalued as other tech names. And I believe it didn't sell off as hard as other tech names on Thursday and Friday either. I think it did a little bit better. So I think that one's going to be all right. I mean, I know we picked up some out of the money calls when it was selling off, and it might be a long shot to see profitability on those, but it could be a pretty good reward if it works out. So we'll have to see.
Yeah, I like that trade in Microsoft. I also think that was it Thursday or Friday we were talking about where's a good entry point. We're like, well, if it gets to 205, that's probably where you want to get in at. And I think it just missed getting, I think it got to like 205.50 or something, and then quickly recovered back up to, I think it closed Friday at 214. So like you said, it's performed a little bit better than some of its peers, and for good reason. It hasn't been as crazily overvalued and run up as some of the other names, but this is a name that if you do start to get a sell-off on, I think you should add an equity position to it if you don't already have one. Get in those shares. Great long-term play, obviously. And like you mentioned, we got some out-of-the-money calls. I think they were the 222.50s maybe, or were they the 225s? I don't remember off the top of my head. But I do think that if you start to see this thing move in the right direction, it will recover quicker than the other names, just given how well it performed to the downside. So I like that call for next week. Moving on to our next segment, I'm going to talk again about the rare earth metals ETF, REMX. This is something we've talked about for a few weeks. It's been slow developing. If you got in this trade, I just want to remind you to hang on. It's basically right at trend line right now. It's kind of what we talked about. It looks like it's setting up a potential cup and handle. Just hang in there. If this thing works out the way it looks like from the technical side, you could see this head to $44, $45, maybe even a little bit more, depending on just how strong the technicals push through. So I just want to remind everybody, stay in that. If it does break trend, which would mean it trades down below 40, you could potentially look to get out at that point. I think the chart would be broken then.
Yeah, and then there's still an opportunity to get in some gold before it moves higher. I believe it was on the last YouTube video that we mentioned. We picked up the IAU October 16th, 20 calls, and just been slowly picking them up here and there when the price is right throughout the past week. So still looking for a nice move in gold.
Yeah, I like the gold call. You can see it's still consolidating. And I think the reason we went with the IAU is it was best bang for your buck. It's similar to the GLD, but it trades a completely different value. And you could get those calls pretty cheap. Those 20 calls, I think they traded on Friday for 10, 15 cents, with the ETF trading somewhere in the low to mid 18s. So a lot of potential there to see that move back towards 20. It's previously touched 20. If that happens, those calls are probably going to go 30, 40, 50 cents pretty quickly. So I like the potential there. A lot better bang for your buck than GLD. I think that's all I've got. Evan, you got anything else you want to add?
That covers it for me as well.
All right. Well, that wraps it up for the week. Thanks for listening, everybody. Thanks for watching. If you haven't already, go down, hit the like button. Go ahead and subscribe to us. That way you get alerts every time we put out a new video. Like I mentioned, follow us on Twitter and Instagram. We do put out trades every once in a while, just like this week's Shopify trade. And then also go check out our website, everydayproinvestor.com. If you want to trade with us in real time, get real-time alerts, go get signed up there. It's a great service, very affordable. And let's go out there and let's have a good week.